Guys, welcome to YouTube channel Account Nova. In today's session, we will be discussing about the statement of cash flows. This will be as per US GAAP, and it is one of the topics or important topics that will be tested in US CMA, US CPA examination. So let's not wait. We will directly pitch into the session. So let's understand what is statement of cash flows. So the main goal of the statement of cash flows is to provide relevant information about what you say the cash receipts and the cash payments during a specific period. Correct. So it helps or it provides the information about the cash inflows and outflows from the key areas of the three areas, that is the operating, investing, and financing activities of an entity. Okay. So always remember the statement of cash flows is always reported in operating, investing, and financing activities. That is OIF in the same order. First, the operating activities will be reported. Next section will be of investing activities, and then the financing activities. Don't jumble up the activities, okay? It should be OIF. So, what's the use of the statement of cash flows? So, what the users get by reading the statement of cash flows? So, it helps to understand the liquidity of the business. What's liquidity? Whether the whether the business is able to generate enough cash to pay its vendors, to pay the utility bills, to pay the short-term obligations of the business, so that it keeps the business running. Okay, cash is one of the most important aspect of a business. So even though the business is profitable, if there is no cash, it can it can fail. Okay, so that's why it's one of the most important statement for a user. Could it be to the business or to the outsider? Correct. So also it helps to assess the financial obligations of the business. How much interest is paying? Okay, so how much principal it is paying? So these are the information that we can get from the cash flow statement. Okay, and also it helps to assess the adapt of changing financial needs. That's the flexibility. So these are the main important thing that a user will be able to get the information from a statement of cash flows. So the statement of cash flows reconciles the cash from the beginning balance of the cash with the ending balance. Okay, sorry, I think there is no ending here, but let's keep it as ending balance with ending balance. Okay, it reconciles the beginning balance of the cash with the ending balance. This is the general overview of the statement of cash flows. As we proceed, we will also be seeing a example, a lengthy example to understand what it is. But for now, let's understand what is cash flows, then operating activities, investing activities, and financing activities. Once we understand all these topics briefly, then we will go and solve an example so that you will understand completely. So let's proceed for the next topic. So the financial statement under US GAAP, as said, is divided into three cash flows into three categories. That is OIF, operating, investing, financing, and they should be in the same order. Please mark it as important. So First, let's understand about the operating activities. So, operating activities are those cash flows that comes from the day-to-day business operation, correct? The transaction and other events that comes from the principal revenue producing activities. For example, a mobile manufacturing company, the principal revenue comes from the sales of the phone, from the sale of uh, the mobile components. So these are the core business of a mobile company. So if it generates some profit or some revenue from selling of a land or selling of something like uh, uh, a warranty, it or let's not take the warranty. It will be sometimes bundled um, with the phone itself. But let's take an example like revenue from advertising, right? From giving ads or revenue from selling of land. So these are not the core business, core day-to-day business of a mobile manufacturing company, correct? So these will not be included here. Okay. So that's what the cash flows from the day-to-day business operations. This includes inflows and outflows from regular business activities, selling goods or services, paying salaries, etc. So these will be under operating activities. Let's not worry about how to divide, but let's look into the examples that we will discuss it later in a illustration that we will be solving in the coming session. But let's understand briefly or on a macro level what are the examples of cash inflows and outflows from operating activities. Cash received from customers. Understand cash received, not accounts receivable. So if any sales that has happened on or service that has sale of goods or services that has happened on a credit basis will not come here. But if a cash received from a account receivable account, yes, then only the cash received will be counted here. For example, let's take there was $1,000 of sales. In that, 500 is account. It was a cash sale, and 500 was a credit sale. So how much you should record? So you should record 500 only. Now let's take a deeper example. So there was 1,000 of sales, 500 was a cash sale, 500 was a credit sale as usual. So you will record this one. But understand on a balance sheet, there was like around 1,500 accounts receivable balance. But in this 1,500, we have received 500 during this period, but 1,000 is still outstanding. We will also record this one as well because the cash is received here. This 500 is also received. So 500 plus 500,000, we will record 1,000 as cash received from customers. Okay. So as we solve the illustration, you will be able to understand this. But as a basic example, we have given here. So we'll proceed further. Interest received. Again, it's cash should be received. It should not be a receivable. The cash should be received. So it is classified under operating in US GAAP, the interest received. Okay. Dividends received. So don't confused with the dividend received as a financing activity. Maybe in other accounting principles, this may be classified as a financing activity. Don't get confused. Dividend received is operating activity as per US GAAP. As usual, refund received from suppliers or taxes. So these are also classified under operating activities. These are cash inflows. What are the cash outflows? Payment to suppliers. Cash payment to supplier. payments to employees, as you know, rent, utilities, insurance, other operating expenses, income tax paid as well, interest paid on borrowings. Understand? Interest paid on borrowings is an operating activity, cash outflow from operating activities. Okay, correct. So these will also come under operating activity. But the principal paid on the borrowings will be a financing activity that we will be discussing in the further sessions. But on a brief note, just understand this much. Interest paid on borrowings is a operating activity. These are cash inflows and cash outflows from operating activities. There is one more thing called as non-cash activity, so that we will be discussing in the next session. So until then, take care. Goodbye. Meet you on the next session. Thank you. Signing off. Account Nova.